So today we're going to I want to speak on the concept today, because I want to make it a point of duty. I want to make it a point of duty to always speak on one concept per week. So today let me speak on the trend line concept because I can see that there is an obvious trend line formation here. Personally, I do not trade, well, that's a disclaimer. Personally, I do not trade trend line strategy, but I have used it to trade in the past, but I didn't think it's the most efficient way to trade. But there are a lot of people say, that being said, there are a lot of traders that use trend line. In fact, there are master trend line traders out there. So that's no bullshit on trend line. In fact, I think trend line trading can be a very strong setup or strategy because no matter how much the market is moving, it always moves in diagonal, and the trend line make use of the diagonal movement in the market. For example, why I picked trend line strategy to talk about today is because there's an obvious diagonal movement here. And so a trend line is just connecting tops and connecting bottom. And as long as two or more tops can connect, you automatically call them a trend line. And I know that there are different names being used, different names. The lines are, or rather the tops and bottoms are being called in Forex. But let's just call it tops and bottom. The top is the top, the bottom is the bottom. Now let's remember I said whenever two or more tops connect or whenever two or more bottoms connect, then you can call that a trend line. And what you do is that you extend it into the future and wait for markets to come up to that price. Now we're going to draw a trend line here. What happened there? Going to draw our trend line here, and then automatically we can see that there are two touches, there are three touches, so we'll extend it into the future. We'll extend it into the future. Now we can see that there's one touch here, there's two touch here, and there's three touch here. Now, these two did not exactly touch. If we presume, we see that these two did not exactly touch, but it is respecting that trend line. So once we see that, in fact, yeah, this is the first touch, this is second touch. So our strategy can help us, the trend line strategy, because it has fulfilled the main criteria of two tops. It can help us to catch this place. It can help us to catch here, and it can help us catch here. See, you'd have caught like three trade if you use this strategy. And I would have replayed if I was using my trading view. But let's imagine price comes back up here. What I'll be waiting for here, this is my H3 time frame. So what I'll be waiting for here is a major sweep of liquidity from the upside and changing character at the bottom side. So because I'm anticipating that price will go down, I'll wait for price to sweep the liquidity up and change character going down. And I'll do that on let's say I'll do that on the 30 minutes. Let's use 30 minutes. Anything from 30 minutes to 1 hour will be okay. And we're using this high time frame because we want to be sure that yes, the setup is solid. It doesn't mean we won't make errors or we won't lose trades, but using higher time frame for confirmation is also a good strategy. Okay. This is where our line is. Let me make that bigger to see. Okay. So we can see that this is price going up to that line. And I must wait for a snatch or a liquidity grab, which I have just seen here. You can see that there's a spike up here. Now, this is not the liquidity grab. The main liquidity grab starts from this this candle here. Why? Because it went up, cleared liquidity, and came back down. The reason why this one is not the liquidity grab is because as much as it made a spike down, it still closed above this previous candle. But this one cleared liquidity and stepped back down. The next one, so after this liquidity grab here, we'll put a line there to signify our grab in liquidity. So that is our grab in liquidity. That's our first criteria being fulfilled. Now, what is the second criteria being fulfilled? We just want the market to change character or to change trend. This means that we want the market to go down and close below an order block. And here we can see this is the most visible order block here. From here to here is the most visible order block because it created a demand. From here to here is the most visible order block. It's 17 pips. So for us now, remember this white line is showing the first grab in liquidity. And so the second line, we're going to put it here. We're going to put it here because that is our order block. That is our order block. So once there's a liquidity grab here at the upside and there is a change of character to the bottom side. Why? Because we're anticipating price to go to the bottom side. So we're waiting for a change of character to the bottom side. And the change of character is just simply when an order block is being engulfed or when price close at the opposite direction of a specific order block. In this case, this is the order block from here to here, up here. And so this after the liquidity grab, price came down and closed below. You can see the body, yeah? Make that bigger. It can't go bigger than that. It can't go bigger than that. So price close here, and that is our trade. That is our trade. Usually I'll wait for price to go up a bit. Probably close this FEG here. But you can as well take your trade directly here. Your stop loss obviously should be above the liquidity sweep, and that's 27 pips. And you target 27 pips or 1.5 pips 1.5 risk to reward as I usually do. So that's how you can trade the trend line. Very easy. And let's use the other. So now this is one. This is one. So let's do the second one. Let's do the second one, which is here. Yeah. So to be fair, let's not use this one because price was still a little bit far away from it was a bit far away from the trend line. So because we want this to be a very honest class, I wouldn't have taken that trade. So this one was the one I would have taken. Price literally touched the trend line. What did we do? So now that we see price going to touch the trend line, we go to 30 minutes, wait for a liquidity grab. Wait for a liquidity grab. After we get the liquidity grab, okay, I think this is the first one. So looking for, yeah, this one. So first of all, wait for a liquidity grab. After a liquidity grab, we then wait for price to change character. That is price to engulf another block. Where is the liquidity grab here? We can see there's a spike here and price close below. We can see there's a liquidity grab here. There's not that much, but there is at that trend line, even though price went above the trend line, there is a liquidity grab. This red candle, price spiked, price went up, but it closed below. So it took liquidity above this green candle, but still closed inside. So that is our grab in liquidity, our first criteria being fulfilled. So After that, we have to wait for an order block to be engulfed. Now, the most visible order block starts from here. This is the most visible order block. It starts from here. I really hope you understand what order block is, though, or probably I'll explain it in another video. But that's our most visible order block, and we can see if we put our line here, this is where the order block was engulfed. Yeah, so here, at this point, our order block was engulfed. So that is your trade. The moment it's being engulfed, you just take your trade. You take your trade from here and you put it at the grab of liquidity. That will be 24 pips, and you can do 24. You have gone down to 55 pips. You see, that's basically it. So the trend line extended till here. And the trend line extended till here. Even though there was a liquid, okay, there's no liquidity snatch here. So that's the easiest way to trade. That is how you properly trade that's how you probably trade the trend line. Yeah. I hope you all learned a lot from this video. And if you found any value in this video, please do well to like and subscribe. Yeah. I'll try to put out much content as time goes on. Thank you.